Oh my God, so sorry you were not hearing me. Thank you for prompting me. Once again, I want to welcome every single one of you on this call. Those of you on YouTube, click the subscription button to get more of the videos. Those of you on the WhatsApp, you are welcome to the class. Yesterday, we were talking about top-down analysis. I showed you how to start from the monthly time frame. You draw your zones down to the weekly time frames. You continue draw more zones. It's called mapping. Then you come down to daily time frame. You look at the chart patterns, the support and resistance, or we like to call it demand and supply. Where is the market? What is the next expected move? What are the possible case scenarios? What are the reversal patterns? So you draw down again, you drop down again to H4 time frame to look at the chart patterns, reversals, optimal trade entry area, trading range on the 4 hours time frame. Then you still need to go down. That's not all. Although when you get to the 4 hours time frame, you know what you are doing. Either you are going up or you are going down. You know already from the 4 hours time frame. And you know if you are going up, from where will you be going up? From where will your stop loss be? You already know from 4 hours time frame. And if you are going down as well, you will know from 4 hours time frame. But when you know where you are going, doesn't mean you should jump into the market. You still need to apply a very important technique. It's called entry strategy. You need to apply a strategy for entering the market. You need to also, at the time you are done trading, when you get to your destination, okay, I'm going up, I'm entering from this place, I'm exiting from this place. When the price eventually goes to your exit, how do you exit the market? Because most of the times, when the price gets to your exit place, there are possibilities that the price can continue going up in a case where you are buying, or there are possibilities that the price might continue sinking in a place where you are selling. So what could be a way to understand whether to stay longer, continue going up for a continuation, or what could be a way to know whether you are to stay longer for a case where the price may continue going downwards? That is called entry strategy, or that is called exit strategy. So we are going to be looking at entry strategy and exit strategy. For those of you just watching or just joining, we have started already from day 1, day 2, day 3, day 4. Today we are halfway in this journey. Today is day 15. Coincidentally, we are adding, or let's say coincidentally now, or interestingly rather, that's the right word. Interestingly, we are adding the weekend as part of the days when we count, because during the weekend, I expect you to be able to do your practice, do your backtesting, and etc. And talking about practice is very important for every student when you are attending a course anywhere to do some personal studies. In the process of personal study, you gain your personal knowledge, which is not something you learn in the class. There's a personal revelation of the market that you gain if you do personal studies. And talking about personal studies, there is a place where I usually always recommend everybody I teach, everybody I come in contact with, everybody I get to impart as far as this market is concerned for a long-term study of the market. I get to get them to visit this website, babypips.com. Babypips.com is a general free website available for training and for materials on forex trading, crypto trading, community, and several activities in the financial markets. Activities including risk management, technical analysis, forex margin, forex glossary, glossary, that is like compendium of words from forex trading, right? Then forex forums, forex quizzes, how to trade forex, etc. You could actually see some tools like pip calculator, back to break even calculator, position size calculator, risk on, risk off meter, economic calendar, currency correlation calculator, market make. Anyway, like I told you yesterday, some of these tools involved in this market, they are like strange tools that you may never need them because you would be able to use some other more popular tools instead of some other one of these. So there is no point trying to force yourself to know everything in the market. But then my point for showing you this is to help you understand that there is a place to go to. There is a go-to place where you can get personal studies and information. Looking from analysis of different people to the news in the market to trading, watch lists, and recap of different traders. Then most importantly, to learn Forex. Start learning Forex, School of Pipsology. New to Forex, start learning. It can take you through the journey from kindergarten till the university level in Forex trading. It's boring, it's voluminous, but it's full of so much details that will really help you. For sure, I must tell you the truth. So this is a place where you can do your personal studies. Then, excuse me, I think I got a notification, which I was expecting for quite a while. Then also, I talked about crypto at some point, and it's important that, very good. I needed to treat a particular order I needed to execute. I cut that order today. What's the time now? 7:28. All right. So I talked about crypto at some point, and we have to pay attention to crypto too because of the bull run, which we are properly entering the bull run right now. And it's everywhere. Canada, America, everybody's feeling the heat, and everybody wants to learn how to position themselves. It's very important. But the place where you go to do your personal study as far as this industry of crypto is concerned, babypips.com, learn crypto. You will learn the foundation, the basics of crypto, how it works, how it operates, how everything in crypto is created, and how people navigate it, and how you can position yourself. You can learn so much. You can even test your knowledge by doing quiz when you learn. There is a glossary, and then there's crypto guides that you have to learn from. So, but then, like I said earlier, it's voluminous, it's boring, but then it has a lot of materials that will really shape you to something unique, which nobody can really tell, where did you get this from? Where do you know this from? It is from personal studies. So do not depend on any mentorship training alone, on any seminar alone, or as good as seminars and mentorship and trainings. It is always very good that you do personal research. And this is a place where you can sit down and do a thorough research from kindergarten level on crypto to the top professional level on crypto. All the materials are available on this website, babypips.com, learn crypto. Forums are here, calendar is here, tools is here, then the other part of it is here. So permit me now to dive in fully into now what we call the setup for monthly analysis, weekly analysis, daily analysis, which you call the top-down analysis, the entire market over. My friend Khalifa chatted me, say, why didn't I say market outlook? So the professional word there is market outlook. So in a situation whereby we go from monthly analysis, monthly time frame, and we saw an asset, for example, the asset is just a new asset that has no very big move. And the closest point to the market is just there. There is nothing to mark on the monthly time frame. In such an asset, we have to drop down to weekly time frame to check if there is anything we can mark. Remember, I told us yesterday, if we change to line chart, it gives us a more closer look at the closest movement in the market. What will it profit you to start marking this support level and this resistance level whereas the price is here? How long would the price leave this place and come here and react with your zones you are marking? So you see, it's almost useless to start marking the zones here and the zones here. The price will never come there until next year. Possibly, highly possibly, because it will take a long thing for the market to come there. Well, anyway, I don't know. I can't really conclude like that. But what I'm simply saying is that far away. It's a weekly time frame. It's far away. So the most exciting or interesting area for us to begin to mark as far as the weekly time frame is concerned is It's even not here because it's even not here. If I go down to daily time frame, that's where I can see what I'm looking for. Aha. My marking started actually from the daily time frame. There is something I saw on the weekly. If I can add it up, I think it would be a good idea. Like I saw something here, this particular one. It's on the weekly time frame. I think if I mark it, it will be good. If I go to the daily time frame, it will help me like identify the mid area of the price. The reason why it's not visible on the daily time frame is because you see the daily is very clear from here, very clear from here. And then so it's like 50% Fibonacci of that area. It's a weekly resistance zone, but it's not significant on the line chart. Anyway, we can still leave it there. There's no problem leaving it there. But when we come to the daily time frame, you can see clearly that we are able to mark the support level. We call it the demand level. Then we go up now, we mark the supply level, which is called the resistance level. So we're able to mark the up, top, and bottom of the daily chart on the daily time frame. Then we'll come down to, okay, from the daily time frame too, we can even see that the price left the supply, went left the demand, went to the supply level. From the supply level is dropping down and it's back again to this level. So it can do, like yesterday I said yesterday I draw 3 patterns. I said the price can do 3 things. One of it is from here to this level, to this level. Oh, sorry. I think this is not the kind of reversal. Sorry. Let me go back to H4 before I can do that kind of thing, right? Okay, let me take it gradually now again. Sorry for that. Let me go a little bit more. I don't want to confuse you guys. So right here, what I can say is that the price can come down here, bounce on this place, and go back upwards like this, hit this guy, or even go all the way to the top, or even go all the way beyond this. The price can do that. Number 2, the price can come down here, come down way, and if it's coming down way, the next resistance level will be this particular, the next support level will be this particular support. So that's all the way down to this part. So all this place is free zone on the daily time frame down to this level here, price level 0.62. That's what we can see on this particular asset. We just pick a random asset, guys. So if we are here on the daily time frame, if we are here on the daily time frame and we have a movement from the bottom to the top, and we have a discounted move down to this area. So for us at this area, we say we are at OTP. So another possibility we have right now is for price to bounce off on this area and move up again like this, then move all the way to the top, a reversal pattern like this. But this will be clearer if we go to a lower time frame, H4. That is chart pattern. So when we get to H4, we'll now be considering chart pattern, and which is what we can see here clearly. It's playing out clearly on H4. On D1, it was not clear. It was showing us as if it's not happening. But on H4 now, we are seeing clearly the chart pattern is playing out. If you look to the left-hand side, this is a support level from old time. This is a resistance that was turned support, now a support level here. So we now have a W pattern trying to form here. This is where I can say what I needed to say at that time I was in daily time frame. All right, so ladies and gentlemen, let's say we have a pattern like this from down, from up to down to neckline. It's coming back here to do an internal W and all the way to the top, reversal pattern formation 1. It can even go all the way to the top. Remember this pattern? I talked about this, that this is one of the ways that the price could reverse. When it's dropping, it hits a barrier, which is a support level. It could use this pattern 1, 2, 3, internal W and reverse. That's one of the way reverse. On H4 time frame, we have to find out reversal patterns. We have to find out structure. We have to find out whatever we need to find out for our entry strategy, for our entry area and our exit area, right? Then number 2, I told you yesterday that another thing that can happen here is price dropping from here, drop down to this level, comes to neckline. It could decide to go deep down below this particular level where we left off from, and then from there pick to the top side to complete the reversal. That's a reversal pattern type 2. Oh, sorry, reversal pattern type 2. This is a second type of reversal pattern that the price could engage, that price could do. and you don't know which one the price wants to do. You don't know. You have to wait for the price to start it before you follow it. So you don't predict the market. You just react to what the market has started doing. So this is the second case scenario. Another thing again the price could do if we are reversing from this point where we are is for the price to come from down like this, the way it is, hit the bottom line, form a neckline, come back to the same level. The same level is called double bottom, exact double bottom. The price is going to do an exact double bottom. That's the third pattern. I remember yesterday I said this third pattern is very rare. The third pattern is very rare. The common ones are these internal ones and these external ones. So these are the three patterns the price will usually use to do the reversal. These are the three common patterns the price will usually look to do a reversal. Yeah, I know there are stops like triple bottom. There are stops like triple. The W will be like in three forms. But then those fall into fractals. When we come to talk about fractals, you see that this W is not just a W. It can have series of Ws inside of it before it happens completely. So it's when you turn to line chart, you are easily able to catch the guy easily. So that is just like from what we did yesterday. Then also I said, what if this price could come from this way downward, form a neckline, but refuse to come an external way, refuse to go all the way up? What if it breaks down here like this and do a pullback, stop here, and show you a sign of continuation to the downside? If that happens, we are going down all the way down, down, down. So that is the last scenario. The price will come and pretend like we are doing this pattern and drop down, retest, stop on that resistance, which was formerly support, and nose down, going down all the way. So it's also a possibility. So why am I giving you all these cases? These cases will tell you that we are still speculating. We don't know for sure what price will do. Because we don't know for sure what price will do, we will pitch our tent here. If price, we have more indications that it's possible that price could go up. So we'll pitch our tent on the bullish direction, waiting for signals, waiting for candle patterns, waiting for entry patterns as to what the price could possibly do. So right now, we cannot look for a sell entry because we have not seen a breakout. So we'll still be looking for a buy entry, but we need to see confirmations. Those confirmations are what forms the entry strategy and the exit strategy that we are about to look into now. So if you turn back to candle, you will see confirmations from the candle perspective. So number one confirmation from a candle perspective, if we are going up from a support level, is bullish engulfing. I said it yesterday. A bullish engulfing is a two-candle pattern where the bullish candle is next to the bearish candle, but then the bullish candle is higher, taller, bigger, close above the bearish candle. There are several types of bullish engulfing candle, but this is a typical short banker bullish engulfing candle. Ladies and gentlemen, if you see a bullish engulfing candle at a support level where we are expecting a reversal to happen from, it is a good sign, signal that we are going up 4 hours time frame. Number two is a morning candle. Morning candle. A morning candle is a three-candle pattern that looks like this. This is a morning candle. It's a three-candle pattern. It's called morning star, sorry. 1, 2, 3, where the third candle is a bullish candle that is taller than the rest two candles. These three candles put together, it's not a bullish engulfing because the candle before the candle that shoots up is not a red candle. If this was a red and this is a green, so we say the two of them is called bullish engulfing. But in a case whereby we have a red first, then sometimes a red too, but a very tiny one, or even a green. Then the third one is a long green one that, you know, shoot more than the last two of them. So the three put together is what we call morning star. When you see a morning star candle set up on 4 hours time frame on a support level where we want to begin to go up, it's a very good signal that we are beginning to go up. In this case, the price dropped down here. After dropping down here, came back into the range, pull back here, form this 3-candle setup. It becomes our signal and give us a reason that we should begin to go up. We need to see that signal from 4 hours time frame. It's either we are seeing a morning star candle or we are seeing a bullish engulfing. If you stay with few entry patterns or through few candle patterns, you will be safer in the market. If you want to work with so many entry or candle patterns in the 4 hours time frame, you will have too many worries, looking for too many things. Keeping it simple, keeping it short will be the best. There are other candle patterns that many people go ahead to look for, but these are the most ideal, simple to find, easy pattern to understand. So I want to just stop with these 2 patterns: the bullish engulfing pattern on bullish engulfing candle pattern. Yeah, is it candle pattern we call them? Bullish engulfing candle. It's a candle pattern anyway. And it's a signal, you can call it that way: bullish engulfing candle pattern on 4 hours time frame, morning star candle pattern on 4 hours time frame. Remember, at a point or as an area of support, then we are good to go for a buy. At an area for resistance, then we are good to go for a sell. In this case, we had a breakdown to the downside, then we have a pullback to this area, then we have a green candle go up, but a red candle superimpose, which forms a bullish engulfing. This bullish engulfing is another type of bullish engulfing, even though the red candle did not come and close below the green candle completely, but it's more stronger than the green candle. It indicates a type of bearish engulfing. After that, what happened? The market dropped massively. So I don't want to really confuse you in showing a sell opportunity and a buy opportunity. So, but permit me to just always stay on buy opportunities for now. So whenever we're looking at sell opportunity, we'll be using sell opportunities for examples to explain all the concepts we're explaining. So still talking about the candle pattern, the bullish engulfing, and also the 3-candle pattern morning star. So when that is seen, that is done, the next thing is for you to look for entry after that has been seen and formed. So you drop down to a lower time frame like H4, or you drop down to another time frame like M30. H1 or M30. Already you know we have a bullish engulfing here, which form a neckline here. Then we have a pullback again. Now, so what you are looking for now when you come to M30 or even M50, let me go down to M30, is much better. When you come down to M30, what you are looking for now is called your entry. You are looking for your entry strategy. So what you have here left on M30, after you see either the bullish, remember this is a drop down first of all to the support level, which is our low of the trading range. Then this is the bullish engulfing that formed, telling us that now we are ready to go up. Then we needed a pullback now down into the OTE area. Remember I taught you about OTE when we started earlier. I said if this is the base and then this is the height. So in between the base and the height, we need the price to come down to OTE before we look for our entry. So you must always maintain that OTE formation. The price must come down to OTE, optimal trade entry area. What is optimal trade entry area? This is the area that is less, that is in the discount. Let's say you have the home here, you have the away here, and this home you want to go all the way up. So you want the price to drop down into this area and stay anywhere around here. It can even bounce here if you like, or even go down if you like and come back, but it must stay around here. After the home, it must go up a little bit and show you a sign here that we're now ready, not from the bottom, but from a signal must be formed around this area here. Anywhere around this area, you call it the goal post. It's not at the goal area exactly, it's not at the 50% exactly. So it's just around that middle area there. This area is called the OTE. The OTE is in between the goal posts, that's the support, the bottom, and midway. The OTE is in between that area. That is what we call the optimal trade entry area. So if we have the bottom and the top, I beg your pardon here, then in between the bottom and the top is our OTE area. All these areas are OT. All these areas you see me circling and doing jagala jagala is our OTE area. So anywhere we find our entry, that area to find our entry is called optimal trade entry. If you see your trade around that area, then it is a good trade entry area. Somebody was asking me, say, is it okay for me to still enter? I said, do you want to catch a falling knife, enter into a moving train? So question you need to ask yourself is there an entry candle on 4 hours time frame? If the answer is yes, good. That's this one. Number 2, after the entry candle form, either morning star candle or bullish engulfing, is there a pullback down into OTE area? There must be a pullback. Once there is a pullback down to OTE area, we are good to go. Don't enter at the bottom, because at that bottom, the price might break, go down, pull back, retest, and go down to your SL. So you want to wait for price to come down to OTE area and price to show you a sign at that OTE area. So if it's the first move signal on H4 gives the pullback, then you want to see price show you a sign around this area. What is our sign? There are 2 signs. Number 1 sign is bullish engulfing. Number 2 sign is morning star candle. So you need to see that on M30, or you also need to see it on M15. If you see it either M30 or M15, you are good to go. If you see it either M30 or M15, you are good to go. You want to see a morning star candle, or you want to see a bullish engulfing. Gentlemen, sometimes you may not even see any of them, and the price will leave you and go away. So sometimes you have to just take your risk. That means this trade, there is no solid confirmation. Then when you come down to M15, you are able to see your signal. It's called signal. Yeah, entry signal. On M15, or you see it on M30, then you know that this is a very solid entry. In some cases, here, this is M15. Here, when the trade did this pullback, it formed a morning candle here. So there is an entry here on this candle. But this entry did not go through, was violated. That means after this morning candle, 1, 2, 3, this is not really a strong morning candle, because this green did not go up as much as we want. But it's also a signal for people who enter this market. Price pushed but did not go through. We want to see the price break above this level that's formed that bullish engulfing and close above it. That's the idea of the entry. The idea of the entry is that after this bullish engulfing was formed, or morning candles, 3 morning candle pattern was formed, and price pull back to go to our entry to give us a good discount. After the price shows our entry signal, we enter the trade. We want to see that price goes up and break close above. A close above is a full candle that closes above the candle open or candle close of the first signal of H4 time frame. That is what we expect. That is what we expect whenever we see the signal and we enter a trade on a smaller time frame. After we enter a trade, our expectation is that price should go up and close above the signal that was created on M4, on H4, I beg your pardon. I'm having so many distractions right here in my room, but I'm struggling to just put through to make sure that the video is nice. Even people watching it after 2 years, even myself watching it after a year, I'll still be excited that I passed the information, right? So, but I'm sure you are getting the message. Please, if you are understanding what I'm showing you, if it's making sense to you, I'd like you to go to the chat box and put yes. Just type yes on the chat box. If what I'm saying is making sense, please type yes. So still talking about the entry strategy. Now remember that what you want to see after the H4 move is a pullback down into optimal trade entry area. And that ultimate trade entry area is around midway here. And sometimes it may not come so much down to where you want to see it. Therefore, when the pullback starts, you are only looking for a signal. The signal are one of two: morning star candle or bullish engulfing. I saw a morning star, some people entered from this candle. It's still a good entry. Then somebody else might not see anything until we get to this particular place. Somebody saw this candle. There is something we call sweep of liquidity. Somebody saw this candle sweep a liquidity. This was liquidity created here. This candle came down, swept the liquidity, and rejected with a pin bar candle. This pin bar candle is one of the entry signals for some of the professional traders. The moment they see that sweep of that candle done, the next candle they will enter the trade. So some other traders have jumped into this position from this candle. It's still an entry. That's a second signal. I'm showing you two signals that have happened after this trade was established. The pullback came. The first signal is this three candle. Entry was here. The market went. It didn't cross where we expect. It came back again. There was no signal again until this sweep of liquidity on this other side. We call it SSL, sell side liquidity taking. A liquidity was taken here. A pin bar candle was formed here. A rejection was formed here, telling you that there is a potential bullish move that is about to happen. To the left-hand side also, some professional traders will look at this place and look for some stuffs like they will look for order block, the institutional reference point. They'll look for order block. They'll look for fair value gaps. They'll look for breaker blocks. So, for example, let me see if I can mark some of them this time around here. So they'll look for this area that was a supply before. They'll draw it down, and that will be another important area of entry. So if they draw this part like this, and the price goes from the W, come back here, they want the price to drop down again into this area. So those people that usually do that, they like my friend Wisdom Ariko, they usually use pending order. They will set a limit pending order. At the moment the price come and leak here, they are in. So they are expecting the price to shoot. Their expectation after price leaks that place is price is going to shoot all the way to the top and close above the open and close of these candles here. If price close above it, that means the trade has moved. What we are expecting, what we've seen is that price moved from support, created a high here, but the close of the candles were here. Price pulled back and went up and closed above that open and close of these candles here. Then that is an indication that we are going up. The next thing we expect to see now will be anything that happens without any problem. We don't care. It can come down, it can come lower, but then it will be going all the way up there. So that's the next move we expect. Sometimes the move may not come that low. It may just stop here and to go. Sometimes you just stop here and go. Sometimes you not even stop. You just do like this and start going. Sometimes you can even come lower, like a W before it goes. But we will never expect the price to come down and close below this new support anymore. The moment the price leaves this support area and close above, we do not expect price anymore to close below that support zone. If price comes down to close below that support zone, there will be no intention for price to go up anymore. What we now have is now a change of character to the downside, and then we'll have to look for exits. So what am I trying to say? I'm trying to say that if price pulls back and price successfully go up and close above, we no longer expect the price to come down below this zone anymore. But for the fact that price have not closed above this zone here, which is our H4 setup, it means that that buy setup is still valid. So we'll keep on waiting and keep on looking for entry. This is an entry. It didn't go and fulfill our requirements. Then we see another move to the downside again. This move to the downside doesn't mean that we are going to sell. It only means that the price is still looking for another opportunity to take more buyers and move the market. Now we are seeing something that looks like a 3 candlestick pattern, 1, 2, 3. But this is not a very good one because the red is stronger than the green. So it's in reverse. So it is not really a signal to enter. Right here, if you are not in this trade, there is no reason for you to enter this trade. Well, some other persons might say, ignore this red, look at only this red and then this green. So what we have here is a bullish engulf. In that case, your entry is this next candle. So some people might still enter. Whether you enter at this candle, whether you enter at this candle, whether you enter at this candle, all of you are correct. All the buyers are right inside this pullback. So what we say is that you are piling up, buying the dip, buying the dip, buying the dip, expecting the price to do what? Expecting the price to shoot up and close above. That's okay. Once price close above, we are rest assured that we are good to go to the top. If it doesn't go and come back and close below this place, we exit the trade. So in that light, if we are drawing our entry can be one of 3 entries that we've seen. We've identified 3 entries in this market M15, which is the first one here. If the first entry is here, our SL will be under this place. Then our TP is on H4. This is the H4 TP. So you see the risk reward ratio is still very good, which is 2.8, 1 ratio, 2.8. Look at the risk reward ratio. Risk reward ratio 2.8. Trading View just gives you don't need to set it, it's there. Trading View does almost all the settings for you. So it shows you the risk reward ratio is 2.8. So a good risk reward ratio starts from 2, then 3, then 4. If your risk reward ratio is 2 or more than 2, you are in a good position. So that is based on the first entry after this first signal. The first signal we saw was a 3-candle pattern 1, 2, 3. Even though this signal is not a strong signal, most times I still take it because the market may not give you exactly the thing you see in drawing or what you expect in the drawings. So you still take that signal. So let's say you miss that trade. Your next opportunity to enter and the price goes up, come down. You don't just enter like that. Your next opportunity to enter is when you see another signal. The next signal we saw is this one. After this pin bar, the sweep happened here, the pin bar happened, the next candle is our entry. Let's say we enter the trade, the price never even went our direction, never went up our expectation, it came down. We are still within the trade, and our stop loss is still below. And we can come down here, we can even come down here, we can even come down here before we shoot up. It's possible. It's possible. Remember, we have structures like that. But if we have to come down, close below this range, pull back, then show a bearish engulfing, it means we're out. Even if we have to come down and close below a little bit, so far there is a candle body close that is below the last candle body open here. So far there's a candle body, no matter how small it is, and there is a pullback and there is a bearish engulfing. Ladies and gentlemen, the party is over. Get out. Put your SL. Which is why our SL is close by. So all this place we are right now is the place of risk. Anything can happen. We can lose. So this is where we do not have power over the risk. And that is why we keep the risk short, small. And that is why we are not entering from after the bullish engulfing, we enter the trade. So the risk will be longer. So we decided to come lower and find our entry after a good signal so that the risk will be smaller at least. We're not risking so much if the trade goes back. So you know you are always preparing for what will happen if the trade does not work, right? Which is the risks. So apart from this particular candle, 1, 2 candle, our entry is here. The next place we are getting our entry again is here. Why are we entering here? We're entering here because of bullish engulfing 1, 2. 1, 2 bullish engulfing. 1, 2, 3 would have been morning star, but it's not, it doesn't form a perfect morning star. So we decided to say 1, 2 bullish engulfing. Just like this place, we have also 1, 2 bullish engulfing. Right? So here we have the bullish engulfing, then we enter. Remember this 15 minutes time frame. We saw a bullish engulfing at OTE area, at the same area of what we call breaker block. At this place, the market formed a resistance, pulled back, broke that resistance, came back to the same area. This same area we are seeing a bullish engulfing. That's the reason for us to respect that bullish engulfing. We take it to the top. We are going all the way to the top. That is 3 entry signals that I've shown you guys. 3 entry signals. And these entry signals are happening at OT area, the very support area. Let me take this out because it's not part of our drawing. I was explaining something. The very support area, which is our trading range. And above that trading range, we now have our entry setup. Then we now put our risk reward setting. We now put our risk reward setting right there. Then the next thing is we enter the position. From M15, we enter the position. Once we enter this position, we are going all the way to take profit. We are not looking backward. Why are we not thinking about what will happen here? What will happen here? Our only concern when we enter this position, our only concern is not anything happening here. This place is a free zone. It will take care of this guy ASAP to clear it. We have a high confidence that it's going to clear it. It's going to take time. It might range there, but it's going to take time to clear it. Our major concern when we enter into this trade is for the price to go and close above this place. If the price is able to close candle above this high, our concern is completely over. We're supposed to take some profit because there will be a pullback. Remember, that pullback may come as low as this place again. 1. It may come as low as this place, type 2. And it comes to type 2, you can do pullback, retest, continuation to the downside. That's a bad one. So that is why when we make this first move to TP1, you should take some profit. TP1 has been crossed. Possibly it could go up and pull back and do type 1 W pattern. That's first move, W, go up, come back again, stop here before moving upwards to our destination. Sometimes it doesn't come that low. It will just stay. After that breakout, it will stop somewhere here and move. Sometimes after the breakout, it will not even stop. It will just be going like that, a little bend. Sometimes it will come down halfway, 50% Fibonacci before it goes. Sometimes if there's anything like breakout block there, we use that breakout block, turn its resistance, turn to support, and use it to go up. Sometimes it comes down exact W pattern and go. Sometimes it comes lower. So whichever one that happens, we don't know. That is why when the trade moved from our entry to the first take profit level, which is the H4 zone that is marked, the H4 signal mark, that bullish engulfing or that morning star. If it goes to that neckline, take profits. Some traders will not even trade this position until the neckline is achieved. They will wait on the trade until the trade goes, bust neckline, pull back before they enter. What usually happens to them is that they will only get an entry if there is a pullback here, or if there's a pullback down to W, they will get an entry. So for we who understand these gimmicks, we get a second entry when there is that pullback. Most of the time when the market leaves this place, it leaves with aggression. You know that the wave of the river that just go and bring down buildings. Aggressive push. So sometimes when it breaks this zone, it doesn't even do any pullback. It goes up on its own continuously. So those traders that refuse to take the entry from here, when there is a breakout here, the market doesn't come down again to give them an entry. So they miss the trade. So instead of you missing that trade, when you see this first leg, it makes the move to form the W. That's the bullish engulfing H4. It pulls back to ATE area. Look for an entry M15, M30. Enter that trade. When it goes to TP1, take some profit. When it pulls back, load in another entry. If it pulls back again, load in another entry. If you pull back and close below this support, close all your position. Trade is gone. Especially when it pull back, close below, form a break the support, turn the support to resistance, form a bearish engulfing, just give it up. It's gone. It's gone. If you don't give it up, you will start hoping. Oh, I hope it's going to come back. Oh, I hope it's going to continue. Oh, I hope this support will hold. It's a lie. Many times than not, it will not hold, especially when it breaks this support. If it comes down, breaks this weekly support, pull back and shows a bearish engulfing on any time frame, H1 time frame or H4 time frame, OT law, get out. Especially H4 time frame, get out from there. So you want to always observe this entry strategy. This is the same thing you do when you are exiting the trade. The same thing. For the purpose of time, I don't want to overflog trying to what's it called now? I don't want to overflog trying to invert the whole thing. when the price is going back upward, going to hit the take profit. When you see the hit on the take profit, you are expecting the price to do the same thing. Either hit the take profit, come back, form an external W sign, show you a bearish engulfing, get out. Because if you don't get out, it will come back down. Or it might go, break that place, or even not even break it. It goes to the take profit. Take this one out now, please. It goes to the take profit. Take this one out too. Price was coming all the way to the top for your take profit. You want to exit. It hits the take profit area. It pulls back. It goes up again. And it comes back into the range and show you a bearish engulfing. Get out of that position. Because if you don't get out from that position after a bearish engulfing, come back inside the range, it might drag you back down again. So, but when you have a situation whereby the price goes to your take profit zone, it breaks and closes above the take profit. This is a take profit zone. The price goes up, close above the take profit zone, pulls back into the range, no problem. Went back up again and forms a bullish engulfing. You don't need to exit your position. If it breaks the range, pulls back into the range, goes up, form a bullish engulfing, you need to look for an entry at the same zone here. You are going all the way to the top, either at that zone or inside the zone or inside, but not anywhere lower here. Here is okay, here is okay, here is okay. So what you have in that case now is a continuation to the upside. So you don't exit all your position. This is the side for the take profit. What if the price closes above the take profit area? What if the price pull back in? When I say close above, I'm talking about higher time frame, H4, H1. You want to see a close above on H4. That will determine that we are still going up. If you see a rejection of H4, that's not strong. If you see feathers crossing, that's not strong. You need to see a close above on H4. A pullback into a range is not a problem. A push up again to bullish engulfing is a signal for continuation to the upside. So in case you are buying a breakout, you need to see a close above. If a pullback happens, not a problem. Sometimes a pullback doesn't happen. It's just a pullback to the area, then a bullish engulfing happens. Once that bullish engulfing happens, H4, you come down smaller time frame, look for an entry. You are going all the way to the top. Because that place forms the new support. Then this forms the new move, this forms the OTE, and then you go. Once we have a break of this level, you have gone to the next resistance. So I just invited to show you the exit strategy. Is the same thing you did during the entry strategy. Is the same thing you have to consider doing the exit strategy. The same thing. When you invert, you can see it's also the same thing for the bearish move. It breaks close below, it pullbacks, it shows us a bearish engulfing. Look for an entry, we are going down. And that happens especially when you miss a trade. You enter a trade, instead of going to the upside, the trade went to your stop loss. You can turn that trade to a sell trade, but you need to see a close below on 4 hours. Then you need to see a pullback on smaller time frame M15. You need to see a bearish engulfing M15, a pullback in M15, then you enter. But you need to see, first of all, a close below on 4 hours. Then you come down to look for entry time frame. And it's possible when you have a close below on 4 hours for price to go back inside the range. And when price go back inside the range, it's possible for price to now show you bullish engulfing after going back inside the range. When you see bullish engulfing after going back inside the range, okay, we are going up. This is a type 1 reversal pattern, remember. So this is called a fake out. And then we are going back inside the range again. So you need to understand the reversal patterns. And then use the entry strategies. Morningstar, bullish engulfing, pin bars. But I don't really like the pin bars a lot. I like the bullish engulfing. Mostly, I like the bullish engulfing. Then a little bit of the Morningstars. Right. So understand the tricks. on those pivot points, especially weekly points like this. These are weekly points. The monthly points, I draw a zone on it. You need to understand it and make use of it a lot. So this is how to enter the market, and this is how to exit the market. There's nothing complex than what I've shown you. We just have to repeat over and over and over until you master it. Then we need to now understand chart patterns. That will be the next thing we'll discuss. Tomorrow is New Year. So tomorrow is a holiday, is a break. We are not going to come to this class tomorrow. We'll take out tomorrow to prepare ourselves and do all what we need to do. On Tuesday is going to be a class. We are going to do chart patterns, 7 p.m. on Tuesday, chart patterns. I'm going to show you several chart patterns. Then you are going to look for your favorite chart patterns that you easily identify. That chart pattern is what you always look out for. Then you begin to use them. We're going to deal with basic chart patterns on Tuesday. Did I say Tuesday? Today sounds like
Thursday, sir.
Thursday, on 2nd of January. So we are going to look out for chart patterns, basic chart patterns, because you need to employ the use of chart patterns when you come to H4, when you come to H1, when you come to M30. You need to apply the use of chart patterns, especially on H4. Yes. Then on Friday, we can possibly look at advanced chart patterns. You need to look at advanced chart patterns on daily and on H4. Advanced chart patterns like Gartley, that's the harmonic price patterns. Then Elliott waves, corrective and impulsive and corrective wave. Then harmonic price pattern, Elliott wave. They are advanced chart patterns. Then Fibonacci extension, they are advanced chart patterns. So we are going to look at them on Friday. Then we'll end the week with that analysis. Then we come back again the following week, which will be like the final week. We'll start practical. In the following week, we'll expect you people to bring the analysis, bring the signal, we'll scrutinize your signal. Then we'll just be analyzing and entering the position. The final week is practical. We'll be entering all the trade with $2, $3, $2, $3. We'll look at the position. We'll analyze all the pairs that you people have brought. Anyone that is good for entry, we'll enter it $2 and hold the position. So that is how we will wrap it up. Then we'll be doing question and answer. There are so many things I am not able to teach because it will be too clumsy. So what I did was I picked all the important area you will need for your journey. As you keep going in the journey, every area I skipped is just an extra ingredient you need. The major thing you need, I have given you. So sorry, my network tripped off, but then we have to round up the class now. I didn't see any question, but I just have to come back again to round up the class. So if there are any questions, please do not hesitate to drop the question in the VIP traders channel. I will see the question and I will attend to the question. I want to appreciate all of you who were dropping your analysis yesterday. It really shows that you are really catching up, you are learning the stuffs, and you are trying out your hands. Please, this is good for nothing if you don't practice it. I could do everything I could possibly do, but if you don't practice what we have done, you will not be able to master it. And if you don't master it, you cannot use it. So you have to practice as much as possible. So whatever we have taught, whatever we have done, go out there, go to the trading view, practice it, execute this trade on MT5, execute this trade on demo MT4, execute this trade on demo Mexi exchange, execute this trade on demo Bingex exchange. There's a free account on Bingex, $20. Execute the trade on it. Get people to register on Bingex using your link. Execute a trade on top of their $20. Check your family members who do not have the Bingex account. Use your link, register them for the purpose of that $20 so you can put a trade on it. This particular trade we are in, you can just look for somebody that have not registered. Use your link, register them. Under 5 minutes, you get $20. You open the position and leave it there. It could give you, that $20 could give you $80, $100. It could give you. Because we have a very sweet position on that asset that we just open. Move is an AI asset. When I check on Twitter and I saw what they were doing, it's crazy. So they have a strong potential. So they could drive that move. If the market is rising with a new year, happy new year move, it could drive that move. I mean, that asset, I mean, that trade. So with the excitement of the new year, money is going to pump into the crypto. You don't need to be told. You should know this by now. The excitement of the Christmas brought volume to the market. The excitement of the election brought volume to the market. The excitement of the new year will bring volume to the market too. Remember when government is changing hand in America. So this is a good trade that you should pick and hold the trade. Solana is also a good trade. We are looking for a break of that neckline, a pullback, a break of 200, a pullback, then we'll find an entry and go in Solana. So you could just get somebody, register there and use the free account and load it. Or you could just get your $10 account and open a $2 position on it using risk management to hold one of these positions. So please, let's do more analysis. Do not leave the groups quiet and silent. Let's do more analysis. I want to see like 10, 15, 20 analysis every day from different traders, from different students, from different members of our group. That's why I made you admin there. Throw in those analysis there. Monthly time frame, weekly time frame, 4 hours time frame. Please separate your lines. If the monthly is a zone, use zone. If the weekly is a tick line, use tick line. If the daily is a thinner line, use a thinner line. Then stop drawing lines. For the 4 hours, don't draw any line again. Just be using chart patterns, support and resistance. Okay, you can draw trading range, which is a tiny line. Your trading range, entry and exit. Then your risk management, green and red pattern. I know you may not have that in the phone. It's there on the phone. It's there on the phone. It's there on the phone. And also try not to use only phone for analysis. Try to use laptop to be a professional. Then try to also do it also on the phone. It's stressful actually on the phone. So let's have this assignment turn up. I appreciate you for turning up the ones we had yesterday. So I need more. Let's keep it coming. So see you again tomorrow on Thursday. That's 2nd of December, January 2025. So bye-bye 2024. See you next year, 2025. My time is up. Thank you for yours.